The market just went through a major deleveraging event that took place over the last couple of days. This spilled into the cryptocurrency sector, momentum stocks, growth stocks, software stocks, and more. In this week's Sunday Scan, we're going to go over some of the reasons why that happened and what are some of the best setups going into the following week. And that'll help you to get prepared and save you a bunch of time. I'm Chris with Investors Underground, and every single week we do Sunday Scan, which helps you to really get familiar with what's been going on in the market and how to get prepared if you're an active trader into the week ahead. So a lot of things to go over this week, and we're going to pull up a bunch of charts here. But really, a week for the record books. You had some massive moves in Bitcoin. You had huge moves in things like Robinhood and things like MSTR. And really, across the board, you just saw a bunch of money kind of coming out of some of the most leveraged parts of the market. And I think that there's a couple reasons for this that we're going to get into, but it really all started with the precious metals and some of the parabolic moves there and some of the massive increases in the market cap of some of those markets. And if you're looking at, markets like gold or silver, you're not talking about just billions of dollars, you're talking about trillions of dollars in swings in market caps. Now, of course, a lot of that is kind of just based on buying and selling pressure. It's not actually that amount of money, but there is a bunch of leverage that's built up in the sector and in the market in general. And when you have very outlier events happen, it tends to cause more of a risk-off environment as you have funds maybe blowing up. People have to reaccount for new statistics that are being taken into account and some of the quantitative strategies, and so you can have a big reshuffle in the market that leads to a lot of money coming out of some of the over-leveraged sectors, and then it kind of gets repositioned into what makes more sense given the current circumstances. So last week we talked a lot about how the silver crash and the nomination of Kevin Warsh as the new Fed chair, a lot of those things were related to the dollar moves, and so there's some macro headwinds there. And now you have some other things happening with the cryptocurrency sector that we're going to get into. So before I pull up some charts, I'm going to just give the disclaimer now that I'm not a financial advisor and these are not buy or sell recommendations. Everything I'm going to talk about is for educational and informational purposes only. So before I pull up some of the charts, Investors Underground loves volatility. We love this kind of action. And I've been hearing a lot on, Twitter or X, a lot of traders are having a very difficult time with this type of action. There's overnight gaps, there's extreme moves, there's things that are statistical outliers, but really it's a day trader or an active trader's dream out there right now if you have the setups to actually capitalize on them. So Investors Underground, we are active traders, and that's what we love to do. We love high volatility. We love new information, breaking news, and things like that. So what we're going to do is we're going to offer our first sale since Black Friday, so that if anyone's looking for a active trading community, you can really join Investors Underground at great prices to help you navigate some of this volatility and to really learn to thrive and appreciate and capitalize on these types of moves as opposed to just being a victim to them. So for instance, we just had a video come out with one of our moderators, Nick Kasnet, who is up 650% last year. And so just these moderators who have been around for a long time, many market cycles, and they like this type of action. So if you're interested in trading alongside people like Nick, people like myself, Nate, Stan, Judah, so many other great people in the Investors Underground community, and you want to do that and get some of the educational content too, like the Legends Playbook, like some of our other educational courses. We are running massive deals right now. And so it'll be for a limited time, the next couple of days, but we're really having a volatility sale. So if you want to get better at trading volatility, Investors Underground is the best place to do that. So we will have some links in the comment section of where you can see all those deals. And we're offering a bunch of different combinations of the courses and of an Investors Underground membership. So make sure that you check those out. And I think that it will really make a big difference in your trading if you've been looking for a great community that really thrives on this type of action. So that being said, let's get into some chart share, and we will go through a couple of things, starting with the silver move. So this is really what started it. I mentioned it a little bit in the intro, but silver and gold, these are massive market caps, and these are sectors that a lot of leverage gets built up into. And so when you have a move like this in silver, that's wiping out hundreds of billions of dollars, and that can spill into many different types of hedge funds and basically quantitative strategies, blowing up models because they're statistical outliers. So In many markets, what tends to work is, you have these elaborate models based on history and these, formulas and everything like that. And those work most of the time, but there's outlier events that make them useless and it blows those up. But the problem is that those models work pretty well over, extended periods of time. And so leverage builds up around them. And so when you have outlier events, those models have to basically get, recalibrated, readjusted, and a lot of money can start to leave more risky things and get repositioned into some other things. So, for example, you had massive moves in silver, you had massive moves in gold, and then that really spilled into moves in Bitcoin and things like MSTR. And you had MSTR earnings on Thursday night, and so you basically had a flywheel of MSTR panicking, Bitcoin panicking, and the two are so closely related because MSTR is really the key Bitcoin player at this point. And I think that, we've talked about this a decent amount over the last several Sunday scans of how when you have the treasury companies come into the crypto market and they're the main layer of demand, when it gets below their average, when they run out of money, they can no longer buy. And so they flip from being a demand or an asset to the sector to being a liability on the sector. So, you really had to see what they were going to say on their earnings call before it found some stability because you had some massive moves down into that earnings call. And really, the key thing that everyone wanted to know was now that Bitcoin is below MSTR's price of purchase, their average cost of purchase is around $76,000, and so at current prices, Bitcoin's around 69 or $70,000. And so everyone wanted to know, what are the risks associated with that? Michael Saylor and MSTR went from having tens of billions of profit on their Bitcoin position to now being at tens of billions of dollars in losses on that same position. So that's a huge liability to the sector. And people wanted to see was, what was Saylor going to say? Was he, basically going to say, I'm going down with this ship and no matter what happens, I'm not selling and everything like that. And, those are risky things in the market. People have to remember that CEOs and presidents and people who are leading companies, they have a fiduciary duty to basically look out for shareholders. And if people start acting massively recklessly, they can be voted out by the board of directors. They can be sued. There's a lot of things that can be very liability driven to some of these companies that are going from being, heroes when the sector is working for them to basically, causing some massive losses during those same things when the cycle turns. So everyone wants to see what Saylor's plan was going to be, and so they kind of reiterated on the earnings call that Bitcoin would have to fall to about $8,000 and stay there for them to actually like go belly up or for them to actually get liquidated. But the more likely scenario was that if we chop around this range, then they can still pay their preferred dividends on some of the products that they've listed there. And a Saylor actually said something that I think gave the market a little bit of confidence. Is he said that if needed, MSTR would actually sell Bitcoin to cover some of their bills. So that is a change from kind of the prior narrative where I feel like Saylor was kind of prepared to go down with this ship and never going to sell and everything like that. But he looked a little bit terrified during the earnings call, I'll be honest. And I think part of that was that he does have that fiduciary duty to the shareholders of MSTR. And, that comes above his personal Bitcoin beliefs. And so if needed, he would be able to sell Bitcoin in order to cover some of those expenses because with things like preferred shares, you're required to pay dividends. If you don't pay them, then basically you lose all credibility in any kinds of those products. And, so companies have the ability to pause dividend payments, but you basically destroy your credibility and you can no longer, issue new products. You can't do a lot of things until you start to pay those dividends back, depending on the terms of the product. So there was just a lot of things there that really spilled into Bitcoin. So the crypto sector kind of followed, silver in kind of that huge deleveraging. So it was just a cross current of a couple things coming together, but the precious metals with the rebound in the dollar, with the cryptocurrency unwind, MSTR earnings, and then you also have this massive basically sell off in software stocks as they all get recalibrated their valuations to more realistic levels. So many of these software stocks have traded at insane multiples for long periods of time. And why does something trade at a very high multiple? It's because people think that the future is going to be significantly better than right now. for those companies. So their growth has to be able to account for that. It's okay for a stock to have a high valuation in the present term if a couple years from now or next year they're going to be making, twice as much, or they're going to double or triple their revenue. But what's happening is that as some of these new AI models come out, you basically have these software companies that used to have super bright prospects to now AI is eating their lunch. They don't have the same growth prospects that they had before. And so that can really impact their valuations. And so I think that at the same time as all these other things were happening in the market, you have this software reevaluation, and you can really see, the total addressable market fall for some of these software companies, while at the same time, some of the AI agents and the agentic AI things, their TAM or their total addressable market is really rising. So just a big reshuffle and recalibration of the market as a whole. And a lot of these things are closely correlated. So, leverage in the system, if you were to look at companies that don't seem related on the surface, so for instance, like Robinhood and Palantir, their business models don't have much to do with each other, but what do they have in common? What are the common denominators? They're very popular retail names. They're very leveraged names. There's many different leveraged products built around them. So there's a lot of buildup there. And then you also have, the growth component, so that they're in the same kind of funds that all use different kinds of, leverage there. So when you have unwinds or deleveraging events, they can look very similar, even though their businesses might not have much in common. Their charts have a lot in common. Their profile has a lot in common. Their customer base or their investor base has a lot in common. And so when you have a deleveraging event, things that are that look different on the surface can actually be very correlated on the way down. So last week we talked about how Hood was going to really be a good template to follow for Palantir. Palantir at earnings. The thesis was that they would reject on those earnings and then basically follow a Hood template for that unwind down. So, that was kind of the idea that I had going into it. And then you had people like Stan and Investors Underground just absolutely capitalized on those ideas. And that's kind of what it's all about in, trading in the community. Some people have ideas. Some people can execute really well on those ideas. They make it their own. And it's just everyone collaborating and, giving their strengths to basically trade the best that we can. And we all help each other that way. So that was a really nice example of some of the trades that we had in Investors Underground over the past week. We had some other trades and things like MU, which, I'm going to go over a very simple tool that people can use in a market like this. Now, it applies to a lot of different types of markets, but particularly in a market like this, a simple trend line can keep people out of a lot of trouble. You see this especially with names that are up a lot. If you have a market regime kind of changing, so if we're going into a deleveraging event, if money is starting to be a little bit more risk averse, and if you have some of these overextended names, even though that their earnings and their revenue is also rising, what can happen is that people can start to anticipate a big, crack in that trend. But what happens is they just get, chopped up trying to do that a million times until it actually gets below a trend line or something that defines that trend. It's like that saying, the objects in motion tend to stay in motion until they're interfered with. And so basically, we're trying to identify what is that trend, what is that motion, and then when it has a change of character, that is when you can get interested. So that's exactly what we did. And by using, analyzing the new market regime, the deleveraging events, and then looking at things like group strength or weakness in the memory sector, using trend lines, and then everyone coming together to talk about their plans for their entries, their exits, and then how they want to basically capitalize on some of those moves. So MU was a really great example of how we traded that in Investors Underground. I had the 390 puts on this. And so once it started to get below this trend line, it came back and retested and I added into them. And so that was a really nice trade as that unfolded. And I think the puts went from 6 to 16 or something like that. So that was a nice trade there. Other people shorted the equity. There's many different ways to capitalize on the same type of move depending on what people are comfortable with. But something as simple as a trend line can really help you to prevent getting chopped up if you're looking for an unwind. So, once it starts to break underneath the trend line, if it's something that has been adhering to a large trend line, then that's an important piece of information. And then also you have kind of a more bearish market last week for the most part. So that was another piece of information. And then you had the group weakness in the memory sector with things like SNDK also unwinding. So that was just a nice confluence of factors that came together for a great trade on something like that. Another concept I want to talk about a little bit is some of these bounce trades or these capitulation trades after you had some really big moves to the downside. So we talked about Hood and Palantir kind of following that same unwind pattern. If you were to look at this, now you have many different terms for this. Like some people call it like a head and shoulders pattern, where you have a head up here, a shoulder over here. You have a similar pattern up here with Palantir, shoulder, head, shoulder. But what's really happening, it's not the shape of the chart that matters. What's happening is that you have a lot of volume traded up here and it's unable to break the highs, but it does break some of those lows. It's just a massive failed follow through setup over a larger time period. So, the same way that on a microcap stock, if it goes parabolic and then kind of stalls out a lot of volume trades and then it starts to break down, you can have a huge amount of the people, the longs that were up here, start to get flushed out, and especially if they're on leverage. So, that was kind of the thesis going into that. But then after you have that unwind, we had some good trades on Hood too. And so basically on Thursday after MSTR kind of had their earnings call and we did some bounce trades on MSTR. If you were to look back, you have a confluence of things with it going into prior levels here. You have a round number at 100. Sailor gave some confidence on the call, and then you also had it very, very short crowded, and all the longs were kind of washed out on MSTR. And so you have the volume increasing, you have kind of capitulatory action into a counter trend catalyst, and that is Sailor kind of reaffirming the market. So that can make for a really nice bounce trade there. And so basically, after hours, the thesis was, or kind of leading up into after hours, some people were trading MSTR directly, kind of, on equity in after hours as that was happening. But before the earnings call, some people, including myself, had the thesis that if MSTR did reaffirm and if the market bounced, especially on a Friday, that things like Hood would bounce really well. And so I actually got the 75 strike calls the day before, and basically the thesis was that if these work out, then they should go, 400 or 500% or something, and then if not, then you risk what you're willing to put into that. So those ended up working out. I sold in the morning, and then it ended up trading much higher. But also these bottoms here, at least these short-term bottoms, they can be good swing long entries. And so when you have capitulatory action to the downside, what does capitulation mean? That means that there's a formal surrendering from longs. And so that means that everyone who's going to sell basically panics out. So anyone who's price sensitive, even for something like MSTR, after such a big move down, you can see the volume increasing, you can see the rate of change of the speed increasing, and then you have kind of some kind of counter trend catalyst around a key area on the chart that can make for some really good reward to risk ratios because you can look for that right side of the V. So after it kind of touches here, you can use this general area within a couple of dollars as your risk area, and then as you're getting back into those retests and it starts to make some higher highs here, that can be kind of your risk level down here. And then if you are right, then you can make some really good trades there. And Nate had some fantastic trades on Thursday night going into Friday with MSTR between equity and options. So he absolutely killed that trade there. So on something like MSTR, that can just be a good bounce trade to take advantage of if you're still somewhat bearish on it overall. But I think that was probably the near term bottom that we're going to see for a significant amount of time. But if you have something that has some better business prospects like a Hood, especially as they have earnings on Tuesday, these can be really nice swing entries if you want a long position. So once everyone's shaken out, once you have some panic, that can be a very significant level, especially if looking left on the chart, you can see that really was a significant spot. Between a prior move and this kind of unwind here. And then also with that head and shoulders type of pattern, again, it doesn't matter the actual shape, but a lot of times people measure from around the neckline up and you look for a symmetrical move down. So we had that. So just a confluence of factors of why we bounced there, but those can be really nice areas if you want a long on this, especially if you think that earnings are going to be pretty good. You can risk kind of the lows of that pivot there. And then if you're right, maybe, this name just trends back up to what it was doing before. So that's something to keep in mind from like a swing trading perspective. But you also want to see, crypto rebounding. You want to see equities in general rebounding. You don't just want to, hammer into a stock that just had a capitulation move for no reason. But if you think that the stock has prospects, if the market's good for it, and you just had a major washout into a key level, that can be a good point to use as a reference for a long entry to keep your risk into control. Coin, very similar situation with Palantir and Hood. You can just see the same thing, big unwind and into a key level, and then a bounce trade shortly thereafter. Couple other things that happened over the past week is that you had names like Google and Amazon report earnings, and so something that stood out with both of those is that they had major capex increases. So what does that mean? Capital expenditures, how much they're going to spend on AI infrastructure, and basically spending to make their business better. And so they both guided up a lot on their capex to around 200 billion each, give or take 15 billion or so, or 25 billion. But that is significantly up. That's tens of billions of dollars more than the market was expecting. And so, if they're spending that amount of money, that means two things. One, they have less money to spend on buybacks. So, historically, the FANG names or the Magnificent Seven, they've been huge proponents of buying back stock for the most part, and everything like that. They've been good cash generators, and they use a lot of that to buy back their own stock. That's true with Apple, with Microsoft, with all these companies. But the ones that are actually really diving into capex now, you're not going to be able to do those same type of buybacks. So that can be something to be aware of. And the second thing to be aware of is that if they're spending that much money, some other company is making that money. And so if they're guiding up something like Nvidia, their earnings and their revenue, I know I have Nvidia on here somewhere, I'll find it. But basically, NVIDIA should be very well positioned. Here we go. To benefit from that. So if Google and Amazon are saying that we're guiding up, 25 or 50 billion each, where is that money going to go? Part of it's going to go to NVIDIA. So that's very bullish for them. And then you have some other names, like one that caught my attention, and we're getting into kind of the main watches for next week now. SMCI. So SMCI used to be, a huge market darling, and then they had a whole bunch of problems, accounting things, and they just really unwound over the last, year or two. And so they went from being, kind of the hot one in the market to a full unwind. And now they just had a pretty good earnings report where they had a huge revenue beat. And so that means that some money's flowing to them. And then if you have these, massive capex increases again, I think they're going to get some more money coming into them too. So after a chart that's been super beaten down has a nice financial reporting beat, and they have some good future prospects, I think that this could be a great candidate for kind of a turnaround story where this one starts to ramp up and maybe test, those old highs, like within the $50 area or so, not the all-time highs, but of this recent move. So this is going to be on watch for upside between calls and equity for myself. And so that makes a lot of sense to me. In this market, I want things that have good prospects going into the next couple of quarters. And then I want to see if the equity market in general has a bullish tilt. So if, we open up on Monday and the market's still super choppy and, still like deleveraging, then that's one thing that could be more risk off on long positions. And I'd be looking more for what are the downside plays. But if the market stabilizes after that capitulation that we had, and you have some things with some good prospects for the next couple of quarters, if some of the Mag 7 names are guiding up and that money can flow into a couple of things that have been beaten down like this, then those make for good trading setups. And then you also had BE report earnings. So they had really good earnings. And this move was very, very volatile this week because you had some initial ramps close to, the high 170s or so. You could take a piece off there to kind of weather through the earnings report, but earnings ended up being really good. But you're really just kind of consolidating in this range still, especially with a lot of momentum stocks kind of stalling out last week. So this held up really well. It did have some down days, but overall, it's just kind of back to this major consolidation area as opposed to things like Palantir or Hood that had major unwind. So if something's just kind of stalling in place, that's a fine sign when the market is weak. And then hopefully when the market is strong, it kind of gets bid. So I want things that have good earnings prospects, their revenues exploding, their earnings getting better, and their backlog is also increasing. So you have that kind of tailwind for them. And then you want to see the market in general kind of recover. And then, I have some calls going into next week. I think that this could be a really nice mover. And if the market really stabilizes, then it could be a parabolic mover, in my opinion. A couple other things, the Dow. So a lot of times we hear about the NASDAQ or SPY or things like that, but the Dow is actually the star of this market. And part of the reason why is that you don't have as much leverage in some of these types of companies. These are more like the traditional, real economy kind of companies. You have things like Caterpillar. And so look at, something like this, Caterpillar, Goldman Sachs, between the two of those names, that's almost 20% of the Dow weighting right there. So it's no surprise why the Dow is doing so well if one of the largest weightings is doing something like this. And again, if you have real world infrastructure being built, then that can be a beneficiary, in something like Caterpillar. So keep the Dow on watch. That might be the leading index for the next, period of time, as opposed to some of the NASDAQ or the, IWM or some other things that have been leading. more recently. AG, so this is a silver name, and you can really compare something that has good earnings prospects coming up in the next couple of weeks as opposed to silver itself. You could see the massive unwind in the metal, and now I think we're just kind of going to be range bound within that. And then you have these silver companies that, if the market stabilizes in silver, and if you're still around, $70 or $80 per ounce in silver, and these companies are producing it for $20 an ounce, then you can see that they're holding up much better, and then they should have a good reaction to those earnings, in my opinion, if the market holds up. So AG is still a swing name on watch that's held up fairly well due to some of the positive catalysts that it has coming up. A few other names to go over. VRT, another one that could be a potential beneficiary of some of that capex increased spending. So this is coming up to a nice kind of like bouncy ball or flat base breakout kind of setup here that Lance and Ariel talk about. And so you want to look at group strength. You want to look at other companies that are kind of in the same sector, but this is setting up for a nice breakout there. And then you have some other earnings winners like Light, LITE, and TER. You have these niche sectors, kind of like in the memory sector, where you have pockets of constraints in the AI trade that some of these companies are really benefiting from. So if they have a niche kind of industry within the AI theme, like TER and LITE, then these can be some real runners, especially while the rest of the market's volatile. The fact that these are holding up as well as they are, it tells you a lot about what you need to know. And then you'll have some capitulation names, setting up for some bounces again in the software companies. A lot of these are revaluing down, recounting some new information, new valuations that take into account some of the AI stuff that's replacing some of their market share. But a lot of these, as they fall into these key levels, especially around that $100 level, again, round number, you're looking at some support going left, so you could have some nice reactions, some bounce trades there. And again, if not at that level, just drop down to the next one. If it didn't bounce at 100, where would it likely bounce next? And you just kind of go down on the chart and see where you find some support, and then you look for that capitulation, that increased volume, and then once you have that right side of the V, where you start to have some engulfing candles, where the daily candle or an hourly candle or something like that is larger than the previous one, and then you can kind of use that low as your risk area, and then if it turns around, you can have some really nice bounces with a very defined risk. And then a couple other names on watch. Avgo could be another beneficiary of some of this new AI capex spending, and so that will be on watch in the weeks ahead to see if that can build a base and start to trend up. And the same thing kind of goes for MRVL. And then you had AMD, they gapped down pretty hard on earnings. And so we'll see if after that gap down, if they are a beneficiary of some of that capex spending, if they perk back up. But if under these levels, then that could be another major unwind into another key area. So those are really the main things that I want to focus on for this week. I hope that it was helpful for you. Again, our goal on Sunday Scan is to kind of go over what's happening in the market, what are some of the major themes, and then how can you really get prepared to trade in the week ahead. And if you want to trade with us at Investors Underground, if you want to trade live alongside me, Stan, Nate, Nick, Judah, all these guys and Investors Underground who thrive in this type of market volatility, then check out those deals that we're running. We'll have those pinned in the comment section, and just scroll through and see, which deals make the most sense for you. Some of them are based around the educational products that we have. Some are just for the chat room and for the kind of trading terminal that we have that has like the AI news. It has sectors, themes. It has like more technology built into it than I think any other group or service out there. It's amazing what, some of the things and some of the edges that it gives you trading, very headline driven markets like we are. So if you want to trade with us, check out those deals and, just give it a try. If what you've been doing has not been working, try something else. Try Investors Underground. And so with that, I will leave everyone for the week. I hope that you all have a great trading week ahead, and we will see you in Investors Underground. Take care.